So I have about a half an hour here that I'd like to talk about functional expense allocations. And for those of you who do not know me, I'm Erin Clark. I am a member of the firm based out of our Hagerstown office. I have 16 years of experience, and the real bulk of my practice is in nonprofits. So I have really dedicated the majority of my career to working with nonprofits, most of that in the audit and assurance space. But here in the past couple of years, I've also pivoted a little bit more to an outsourced CFO and consulting role with certain nonprofits as well, which has provided the opportunity to get a little bit more into the details and see a different side of things than I see as the auditor. And I've also served on several boards, currently serve, and in the past I've served on multiple boards as treasurer. So I've really seen different aspects of multiple nonprofits, and I'm hoping that some of the wisdom that I will impart to you all this morning is helpful as you are running your organizations. So to kind of piggyback off something that Greg said, this is an area that in past webinars and not this particular CPE that we provide, this tends to be an area where folks have asked for a little more knowledge. And so we're going to dive into functional expense allocations and why they matter. So I think most of you on the call likely have audits, but even if you are a smaller nonprofit that is not subject to an audit, whether it's a review, a compilation, or even if it's just a simple 990 filing, you still have to allocate your expenses by function. It is still a 990 reporting requirement. So it really doesn't matter what size your organization is. This is really truly applicable to all nonprofits. And I think the words on this first slide kind of get to the crux of why this is so critical. I think a lot of times, especially the finance folks, we get really into the weeds and the details of the numbers, but to just take a step back and assess the real reason that this matters is because having the right functional expense allocations and the reporting that goes along with that provides trust to your stakeholders. It provides accountability and credibility to your organizations that you are being good stewards of the donations that you have been tasked with spending to further your mission. It helps you to assess your overall impact and identify areas where you can maybe pivot to create more of an impact. Having proper functional expense allocations leads to sustainability. It provides for greater transparency, again, across all of your stakeholders. So that's going to be your internal stakeholders, including management and your board, but also external stakeholders, such as your donors, your grantors, maybe even your clients, your volunteers. And it also helps you assess program effectiveness. So I really can't speak enough to how impactful understanding how you are allocating your functional expenses is critical to the financial reporting, but also just the marketing of your overall organization. So there are three categories of functional expenses. And again, for those of you that are audited or have any type of financial statements that are prepared externally, maybe even with footnotes, this should not be any groundbreaking news, but the three categories are program expenses. That is those programs that are directly related to furthering your nonprofit's mission. You have administrative expenses, and sometimes we will refer to that as G&A or general and administrative. Those are the expenses that don't directly align with a specific program or maybe even a grant if you're grant funded, but they're necessary to operate the day-to-day stuff within your organization. And then you have fundraising expenses, and those are the costs that are associated with fundraising, with bringing in revenues, whether that is going after to solicit grants, whether that is soliciting individual contributions, donations, pledges. It could be holding fundraisers and special events to raise money, but really any costs that are incurred with the goal of bringing in new contribution revenues are going to be fundraising. And collectively, administrative and fundraising expenses we look at as supporting expenses. So you have program and then you have supporting broken down into the G&A and the fundraising costs. So how do we categorize the expense by purpose? Looking at program services versus supporting activities, again, this is all in the spirit of how your stakeholders are reviewing the financial information put out by your organization. So regardless of whether those are audited financials, reviewed financials, or even just, again, a 990 at the bare minimum, this statement of functional expenses that you see here is a snip from the 990. And I know it's a little small to see on the slide here, but you have columns for each of those functions that we talked about. So even at the tax reporting level, you're still breaking out those types of activities. And really, the question that you're asking is, how do the expenses that my organization incurs help to support the organization's programs and services? If they are directly associated with a program and it is directly furthering the mission of your organization, those are going to be programmatic type of expenses. But it's not unreasonable, and it's in fact almost guaranteed that you're still going to have supporting costs as well that oversee the entire organization and may not directly support the mission, but are still a necessary cost. And one of those costs is probably your audit fee. So, by and large, those costs are typically going to be administrative in nature, just because, again, even if they are required based on the level of funding that you receive, an audit in and of itself typically is not furthering the mission of the organization. But that's not to say that you couldn't have other similar costs. Perhaps if you pay an outsourced accountant to do the financial role of your organization, it is possible that cost could have some program components to it as well. And making sure that you have proper 990 reporting, again, regardless of the level of detail of an assurance type of financial statement that you have, is critical.
Hey,
Function,
Erin,
yes,
can I interrupt you for a second? We had two questions come in.
sure.
The first one is MNG also another term for management costs?
Yes.
Okay. And the second one is, could salary ever be considered a programming expense or always G&A, considering a small single employee nonprofit?
Small single employee nonprofit. I would ask, what single employee, do you also rely on volunteers then? Or is that one employee, I guess, doing everything in terms of leading, running the mission, accounting, HR, all of the things? And I know there's probably going to be some follow-up, so I'll continue on, and then Christina, feel free to interrupt once we get that comment back. Yes, my initial answer is yes, but I want to get a little more background on the nature of the organization just to make sure that I'm answering correctly.
Okay, thank you.
Yep, and for those of you who may not have noticed, there is a poll question that just popped up, so please make sure that you're answering that if you are looking for CPE credit as well. As I started to say, function is not the same as natural classification. So when I say natural classification, that's going to be just a general description of what you're paying for. Salaries, other personnel costs, rent, utilities, supplies. Those are all natural classification. Functional is, again, the program, general and administrative, or management in general, or fundraising. So sometimes I'll see a line item on a statement of functional expenses that has a natural classification that just says fundraising. There's probably a little more detail to that because that's the function, not the natural. So just keep that in mind as well. And then again, for those of you that are subject to an audit or may even have a review or even a compilation with footnote disclosures, there are a couple different geographical places that you may find the breakdown of functional expenses in your financials. It could be part of the overall statement of activities. It could be part of a separate footnote within the notes to the financials, or you could have a separate statement of functional expenses as part of the basic financial statements. So when we look at, again, why does this matter? Why is it important? It really a lot of times comes down to donor and grantor preference, because beyond the internal stakeholders, the external stakeholders that are reviewing your financials are probably looking at it because they are either interested in giving you money, they currently give you money and they want to know if they should continue to give you money, or they really just want to get a better understanding of how you use the money that you get. And so understanding that the length of a nonprofit's existence will oftentimes impact what allocation you have in terms of what percentage of your expenses are programmatic versus supporting. I say that because those of you that are involved with more long-term nonprofits that have been around for a period of time, generally speaking, again, there's always exceptions, but generally speaking, are usually going to have more program expenses because you already have a well-defined mission. You have programs that you are serving to your clients, whether it is individuals, animals, serving other organizations. You have those defined parameters of your programs, and so it's a lot easier to figure out how to allocate those costs for programs. On the flip side, a startup nonprofit is probably going to have a lot more supporting costs because they haven't fully developed the programs and are still working through all of the kind of startup type things that have to be in play to get your organization up and running. And again, this overall helps to answer the question that a grantor or a donor could ask, that is, how much of my donation is really going to support the organization, the actual mission? That is not to say that supporting costs are not a valid use of funds, but a lot of donors and grantors want their money going directly towards furthering the mission. And it's also a way to just help with organizational efficiency and help you better run your organizations, your nonprofits. So several years ago, the AICPA put out a study that identified the top 7 errors in functional expense allocations. And to quickly go through these before we kind of get into the meat of how we do this right. Lack of expense allocation methodology, that refers to not having a documented procedure or policy manual as to how your expenses get allocated, or maybe you do have it in writing, but it's unclear. Incorrect classification of management in general. So to circle back to the question that was asked, and Christina, do we have any follow-up on that yet?
We
Clarification?
do, yes. Okay,
Okay.
so the organization has volunteers, but all admin, mission management, HR, event development, and execution, etc., is all the salaried employee. Volunteers may support events or social media.
Perfect. So in that case, yes, I would absolutely say that a portion of that individual's salaries can be identified to or charged to program. And I'm going to circle back to that when I get here to a couple slides further where we talk about how we get to the allocation. But yes, I would argue if you have one employee or even a small team of people that are kind of doing all the things for the organization, even if they are a finance role. I used to serve on the board of an organization where it was all hands on deck, and the finance director still participated in working towards some of the programs offered. So absolutely, there are a lot of times considerations to be had to support the fact that part of that salary could absolutely be programmatic in nature, and some could also be fundraising, depending on the scope of what they're doing. So to that point, that's actually a great segue for the second bullet point, which is the incorrect classification of management in general. I think a lot of times that becomes kind of the catch-all if there doesn't appear to be a direct correlation to what an individual is doing, whether we're talking about salaries or again, maybe you're buying supplies, but maybe some of it is office related, maybe some of it you're going to use for client related expenses, but it's just easier to put the whole expense to G&A, yeah, maybe you need to spend a little more time really dissecting the cost and what you're using the expense for. But generally speaking, there is usually a rationale to allocate costs among programs that you don't have to always dump everything that's not a clear-cut fundraising or programmatic expense into G&A. Similarly, not allocating enough costs to programs. And again, I'm going to defer to salaries on this because I would assume for most of your organizations, payroll and personnel costs are the largest chunk of your expenses. So absolutely making sure that you are assessing those and analyzing those costs and allocating everything possible to program, because as we'll see in a few slides down, there is sort of a threshold that we look at that's kind of the minimum percentage that we want to see there. Ignoring considerations of joint costs, and I have a few slides coming up on that, but there are events, special events, and other situations where an expense might be a joint cost, which means it has both a fundraising component and also a programmatic or G&A component where you would allocate across multiple programs. And we'll talk about that here shortly as well. inappropriate level of detail in natural expense presentation. And there's no one size fits all approach. Every nonprofit is going to be different. But I've seen situations where there's not enough detail in the natural classifications. And then I've seen situations where there's really just too much detail and it's no longer conducive to any reader of the financial statements to really make sound financial decisions because it's just too much information and it's segregated into too much detail to really be able to make financial decisions. Not allocating fundraising salaries and costs properly. So going back again to that one person nonprofit or again a small nonprofit, maybe you don't pay a specific quote development director or fundraising individual, marketing, however you want to call that person. But if you have somebody or multiple people that are doing fundraising, going out and soliciting funds, putting together a direct mail flyer that's going to get mailed, even just assisting with putting on special events, they can have a portion of their salaries allocated to fundraising. And again, we'll look at how we do that later on, but that tends to be another error. And then lastly, for those of your organizations that have investments, misclassification of investment related activity. And that is just because investment expenses get netted with the related income. So those expenses should not show up in your statement of functional expenses.
Hey, Erin, we did get one more question. Can
Okay.
you clarify or re-explain what natural expense presentation is?
Sure. So when I say natural classification, that is just at the very basic level of detail. What are you paying for? Personnel costs, which could be payroll, payroll taxes, fringe benefits, things like retirement, healthcare, etc. Rent, depreciation, utilities. It's all of the kind of what I call like what your general ledger detailed descriptions would be, as opposed to function, which is those three buckets that we're breaking into in terms of how they ultimately support the organization, whether they are direct program or G&A versus fundraising. Hopefully that helps. So we'll go ahead and go on to the next slide. And I do have a couple of slides in the interest of time, and I greatly appreciate the questions that are coming in here. I'm kind of going to go quickly through the next few slides because I have a little bit of detail on joint costs. So I'll summarize kind of based on this slide. And then certainly if you have specific questions and we run out of time today, feel free to follow up. You will have the full slide deck after the presentation as well as all of our contact information. But I don't run into a lot of nonprofits that have joint costs, and maybe that's because they're just not classifying them as joint costs. But as I mentioned previously, these are costs that include a fundraising component and also program and or G&A. So typically, when I see this, it's in the form of a special event, a fundraiser, a golf tournament, an annual gala. I have a lot of nonprofits that have like a signature event that they do every year. So by and large, it's the costs associated with that are to fundraise. But there are situations in play where those costs could also have a program component or a management general G&A component. There have to be three criteria that are met. And again, that's where the detail goes on the next couple of slides, but I am going to kind of go breeze through that just in the interest of time and to allow for additional questions so that this is relevant for all of you. But the three criteria that have to be met are purpose, audience, and content. If at least one of those is not met, the cost is 100% fundraising. And I think the best way that I can explain this quickly is in an example. So let's say I'm going to use local humane society. Animals are very near and dear to my heart. Let's say your local humane society is sending out a mailer asking for a donation. But within that mailer, there are also tips for protecting your animal, such as microchipping, getting proper vaccinations. Those are things that would be programmatic in nature, right? Because in this case, the shelter is in existence to further the mission associated with protecting and caring for animals. So in this case, the cost that you are spending for this mailer, and maybe it is salaries to an individual that is putting it together, actually doing the um, the mailer itself. Maybe you're paying a third party to print There's probably going to be postage with actually mailing it. So all of those costs at first glance seem to be fundraising, but in certain cases, they could also have, such as this example, they could also have a program component. And so in that case, you can actually allocate those expenses across fundraising and program. Again, the next several slides have some further details on that. The one that I will clarify, and Christina, if you can jump ahead to audience, this is kind of the most clear-cut example here. You cannot select your audience based on prior donors. So if you have a database management software that you use to send these mailers, and it is solely based on people that have donated in the past, that is the be all end all. There is no allocating of expenses at that point. It is 100% fundraising. However, if it is something, again, like an event, or maybe you have a database of people that have shown interest in your organization, the easiest way I can think about this is like a social media presence. So if you have followers that are, maybe you're posting this information in an online format, so you're still incurring costs, but you're putting it out there on social media, and so it's open for anyone to see, as opposed to segregating specific individuals that are prior donors, then you have met the audience criteria. And again, there are also purpose and content criteria, but just to keep things moving, I'm gonna jump ahead here to the next couple of slides. And if you have specific questions, please feel free to either reach out in the Q&A or follow up with me directly after this. You can go ahead to the next slide, Christina. Thank you. So the million-dollar question that I get asked is, and this slide is titled Grant Management, but it's also just what is the threshold, or what is it that we are trying to maintain from a percentage threshold? And by and large, the minimum percentage of program expenses as a percentage of total expenses is 65%. Now, the reason that I titled this grant management is because, again, I've worked with a lot of nonprofits that rely very heavily on grants, and every grant is a little bit different. I have seen situations where grant agreements or grantors will specifically, I should say grant applications or grantors will specifically say, if you do not have a minimum of 70, or in some cases even 75% of program expenses as a percentage of total, don't even waste your time applying, because we are not going to fund your request. And so that's critical for all of you, whether you are a board member or an employee, whether your direct involvement is in grants or development, you should be monitoring this to ensure that you are meeting whatever minimum criteria is needed for your grants, because you don't want to lose out on potential funding when this can be a pretty straightforward, relatively easy checkbox to meet. So 65% for program, that leaves 35% for administrative and fundraising. To break that down a little further, I typically see 25% G&A, 10% fundraising. To circle back to what I said originally, it's still going to depend on your organization. So please don't think that that is the requirement, that every nonprofit meets that threshold, because there are situations where you may have more or less fundraising, more or less G&A. It all just depends. But again, monitor it, especially if you're grant funded. The other point I wanted to make, and this is specific to one of my clients that recently found out about some changes in their grant funding. I'm sure a lot of you are in that situation right now. Watch your fundraising allocations for positions that are fully grant funded. I'm starting to see scenarios where there used to be, in this particular example, an organization was receiving grant funding from the state, and they were allowed a percentage of fundraising. So this was an executive director level position who was serving, her salary was being allocated across all three functions, including fundraising, and historically the grant allowed for that. This year, the grant came out and said fundraising is no longer allowed for this grant. And so she being the executive director, being fully grant funded from that grant, her salary is fully funded by that grant, is going to have to pivot because she can no longer allocate fundraising costs to that. So again, it's very easy, I think, to default to this is how we've always done it, and this is just the nature of our operations. But make sure that you are reading your grant agreements thoroughly and ensuring that you're only allocating eligible costs, whether they are federal, state, local, foundation grants. Make sure you have an understanding of that.
Hey, we have a question that I think will be pretty straightforward. So the cost of a flyer that goes out to our entire database, regardless of history of donations, seeking monetary donations and volunteers for the mission can be a joint expense.
Correct. And the key word or the key part there is that it is also seeking volunteers to further the mission. If the mailer is doing nothing more than asking for a donation, that is 100% fundraising. But if you are somehow incorporating something that furthers the mission, so again, whether it's soliciting volunteers, I think that might be a little bit of a gray area. So maybe you take it a step further and are able to include something specific that furthers your mission, like just detailing out more about what your organization is doing, then yes, in that case, I do absolutely think that there is a percentage or a piece of that cost. And what that is, that's certainly up for you as management to determine, but there's absolutely a possibility there that some of that cost could be allocated to program.
Great, thanks.
So direct versus indirect costs, direct costs, and this is going to be applied to both program and also grants for those of you that are grant funded. So direct costs are those that are specifically identifiable and they are required to either operate a project or to carry out a grant. So those could include things like program salaries, program materials and supplies, rent and utilities specific for program space, etc. Conversely, we have indirect costs, and those are costs that are needed to run the overall organization, but they may benefit multiple programs. So this is not to be confused with G&A. So we mentioned that general and administrative costs are also needed to kind of run the overall organization. Indirect costs can still be programmatic, they can even be fundraising. But the point here is that they are not directly associated with one program or with one grant. So where this comes into play is, let's say you are grant funded by multiple grants, or even if you're not grant funded at all, but you run multiple programs, there are certain costs that are going to be allocated among those various programs. It may still be a general and administrative component. There may still be fundraising, but the point here is that they are just not specifically identifiable to one program or one grant. So this is typically going to be seen in things like administrative staff salaries, rent and utilities for administrative office space, depreciation of fixed assets, and other things that, again, are just not directly associated with one particular program that you are doing. Similarly to joint costs, can you go back 1 second, please, Christina? Thank you. Similarly to joint costs, indirect costs should be allocated in a rational and systematic way. And we I alluded to this earlier, but how do we do those allocations? So these are not the only methodologies, but the two most common and generally most straightforward examples would be a time study based on the basis of hours worked. That methodology typically lends itself to personnel related costs, which is going to be your salaries and taxes and fringe benefits. And that is where you are basically having employees track every hour worked. What are they doing? Are they working for a specific program? Is it serving a specific grant? Is it for fundraising? Is it more G&A? But being able to then take a step back and look at the total hours worked over a pay period. It could be over the course of a month or even the entire year. But then that will allow for essentially how much of their costs for payroll get allocated to the different functions. On the other hand, square footage is typically a pretty reasonable methodology to use for occupancy type costs. So that could include rent, utilities, depreciation, anything that lends itself to looking at square footage of a building, for example, and then allocating those costs again in a rational and systemic way. And we do have another poll question here, so if you did not see that, please make sure you're answering that. To give an example of indirect costs related to depreciation, I'm not going to read this, but the idea here is that we have an organization that operates within a 40,000 square foot building. Within that space, we are roughly estimating 35,000 square feet is being used to see patients in some capacity. 4,000 square feet is administrative offices, accounting, HR, etc. And then 1,000 square feet is used for a development department. So in this scenario, we have total depreciation expense of $25,000 related to that building. And this provides a very simplistic way in which you could allocate depreciation across the three functions based on the square footage of the overall building. So in this scenario, this would show you how to allocate depreciation for the overall building among program, G&A, and fundraising, just based solely on square footage allocation. So very simplistic, again, does not need to be overly complex, but the key is to just document the rationale for how you're calculating that. So to wrap this all up, I have some recommendations for avoiding pitfalls, how to get it right. Written functional expense methodology, again, is critical. Doesn't have to be some 50-page document. Typically for, again, even for smaller nonprofits, 1 page or even half a page is probably sufficient, but just make sure you're documenting how you are allocating those expenses, whether they are direct costs, how they get charged appropriately to direct programs or to grants. If they are indirect, how are they being allocated across the functions? Making sure that you're considering various allocation options, which we just discussed. Again, these are not the only two viable options, but they are the two most frequently used and easy to track methodologies. You can use your chart of accounts to facilitate the process. So whether that is having a separate GL account for each type of expense, as well as specific functional classifications. Maybe it's allocating across departments to better track within programs. Again, that is going to be dependent on your specific organization. Please don't overcomplicate it if you don't need to, but to the extent that the chart of accounts can help, definitely consider that as an option. Be able to properly identify direct versus indirect expenses. And again, because payroll generally is going to be your biggest expense, please, please, please document and retain timesheets for employees, especially if you are using those to justify how an employee's time is being allocated to spread their salaries and other personnel costs over multiple functions or across multiple programs or even across multiple grants. If you have significant contribution revenues, I totally would expect to see fundraising costs. I understand that some organizations may not have fundraising costs, but if you are putting on an annual golf tournament or other fundraiser, if you are sending out, again, a mailer, if you are doing anything that is soliciting funds for your organization, it is highly unlikely that you are not going to have any fundraising costs. So evaluate the expenses that you're incurring and make sure that we are allocating properly where they should be. Use your functional expenses to help tell or sell your story. This is a critical percentage, especially if you are well above that 65, 70, or 75% threshold that we talked about. I try to point this out with a lot of my clients that are above that, but use that to sell your story. If your program expenses are 80 or 90% of your total expenses, you can see that in the financials and in the 990, but it's not going to be in like called out. Use that when you're talking to your donors, when you're writing your grant applications, when you're talking to your board. If your board is out there, soliciting contributions or even just talking about the organization, that is such a key metric that donors want to know that so many 90 cents, for example, of every dollar is going directly to the mission. So if that is your organization's metric, use that to sell the mission. And then lastly, conduct a fundraising ROI, that's return on investment, to look at effectiveness versus efficiency. If you are doing fundraisers and the fundraising expenses are costing you more than the money you're bringing in as a direct result of that, maybe either reallocate your allocations, but if necessary, also revise your fundraising strategies. I don't want to say don't do a fundraiser just because it doesn't make money, but in the day and age now where resources are tighter than ever and nonprofits are really fighting for limited financial resources, definitely use this opportunity to look and see if you are getting the most bang for your buck in terms of money spent in fundraising.